Good afternoon, a bit later, Monday market analysis as usual, because of lovely dentist appointments. Let's get things started because it's going to be a very interesting week with a lot of things happening. First of all, what's on the calendar? Quite a bit. We got the, today, nothing really, some low impact meetings and stuff like that. As you can see, I started to add the Eurozone also lately to look for events, because where the economical power of USA is in a bit of a hard time, then the other countries start to be a bit important, and also I'm in the Eurozone, so that's also something to look at. So we have the producer price index on Tuesday at market open, and that's essentially you see it rising and rising and rising, the producing price. So how much does it cost to produce the same goods? Essentially, that's the short summary of this. There's obviously the supply shock and the energy shortages that you see here. It is expected to rise about 0.6%, but if it rises much higher than that, you see this pretty linear line that started December last year, if it breaks out and goes parabolic, then there could be quite a bit of influence on the markets, because that means a lot of companies cannot produce, so they don't make money, etc., etc. So that's tomorrow already at US market open. And Wednesday at US market open, core inflation rates, the most surprise, artificially lowered number in the financial world. The real inflation rate it's obviously a completely different story. I might take a look at that. There was the CPI. This is based on the CPI. The CPI is a basket of daily livings, but it is so manipulated to artificially low it. And I think there was an index already with a more realistic inflation rate, and then you're coming to between the 10 and 15, depending on how you look at it. So true inflation rate is quite a bit higher than this. But same for here, it's expected to go a bit up again to the July levels. And we'll have to see how that continues. If it breaks above the 4.5%, then I think it will be pretty stormish again. So another macroeconomic factor to check. Obviously, the inflation rate year on year, same story, didn't mark them all, but inflation rates is also very handy. Thursday, we got the macroeconomic projections for Eurozone. That could also have some impacts in the earlier hours of the European day, when the European stock markets are open and US is not yet. And we got Friday job openings, how many jobs are available. Doesn't mean unemployment rate at all, but it's also something that might move. If they're expecting it to drop a bit, but if it drops too much or rises too high, then it's also an alarm bell for a lot of economics. So pretty turbulent week. Might see some volatility in the stock markets because of that. Now, quickly running the news sites, Mr. Musk is at it again, but this time for his own shares, dropping them 5%, proposing to sell billions of his own stocks. Yeah, it's a bit crazy, but he doesn't give a shit about anything. We know that by now. Obviously, Ethereum almost or not almost, hit the all-time highs, Bitcoin going slowly towards it again. So the little bit of FOMO already starting there on the major news sites. For the rest, didn't see anything major that could have an impact on crypto. Obviously, the worries about the stock market are increasing. So if we look at the US pre-market, slightly in the green, just above zero, Nasdaq just below, but S&P just above, and Dow Jones is a bit higher. No really big news there. And it's funny that you get a race to 3 trillion, that the big tech companies are growing and growing, and that will only be more if they start to add more Bitcoin to their holdings. So there's a bit of a race there. And it would be smart if they use Bitcoin as a boost towards their market cap, but we will probably not know that until it already happened. Let's look at the fundamental charts. US dollar doing interesting things. And this is on the daily chart. You see we had a double top, had a pullback. Nice, by the looks of it, fib level. 50% retraced there. Got rejected at the same level. So we could get an Adam and Eve top, how they call it. We got the broader Eve top. It should actually be a higher peak there. And you got the Adam top. That's an Adam and Eve bottom and top. But it's not perfect because an Eve top should be a bit rounded more. So this candle should have been a bit higher to make it perfect, but you don't get the perfect patterns a lot. But it bounced off these previous 2 peaks, but it's getting rejected then again. But if we quickly skip to a weekly chart, then there's a bit clearer picture. What we do have here is an ascending wedge formation. Probably something like this. And we do know that the target measured move of ascending wedge formations is the start of the wedge. In this case, somewhere here, what would mean a almost 5% drop in the DXY, arriving at this critical support level again. So if it drops to these levels, could take a while. It's weekly chart, could take a month to play out. Then things could be very interesting for Bitcoin. And you see, then we're coming already. It's usually not in one go, it's usually a gradual decline. So you're looking at Q1, Q2 next year. That's also where I expect the 3rd peak of crypto to happen. So interesting enough on the daily with the potential triple top reversal, Adam and Eve-ish. So always keeping a close watch on that. And we really don't want the DXY to go above the $95 or the 95 points, this one. Because then we're making a considerable higher high since the last month, almost years. And that's what we don't want to see for Bitcoin. Stock markets, we had this small decline here with the trend lines. Once the trend lines got broken, they just took off. Bitcoin is stabilizing a bit, hitting that all-time high, just having a small consolidation below it. But the stock markets just keep going crazy, as expected, as long as the Fed prints its money, which they will do until June next year, probably, or most likely is what they say now. This will have its small pullbacks, but will continue to go until new all-time highs. Gold trade is at its entry pretty much. So still in it, still waiting, being patient, daily chart. Gold is a slow asset. I'll have patience, I'll wait a few months. But I'm trading it leveraged on Femex, gold USD there. Bitcoin, everybody's favorite, obviously. Almost hitting that all-time high, new all-time high again from the 18th. So very nice price action. You don't want it to go parabolic up constantly. Having a small break, consolidation, gain of strength, shake out the over-leveraged people. That's a dip to dip 56. Still looking strong. Perfectly, no problem at all to be seen. CTO ribbon still holding, got support at the bottom, bounced off the top, and if we see that happening, I don't know if we can find another example of that. It was all the way here. Well, we hit the bottom and then we get pushed up. So this is like the bull market support band, where I look at as soon as it, if you see it gradually fading out and price beginning to move inside it, then that's definitely bear market. Obviously it's delayed, but it's definitely a support resistance level on the higher time frames. We're very comfortably above now, so no bear market inside there. Same goes for the hash ribbon. These buy alerts are just bloody insane. I always am for a nice watch out when this happens. It usually means a hell of a lot of profit to be made. So if you're spot trading, then spot trading on higher time frames, then take a look. If you get capitulation, it's a good time to exit the market. As you can see here, you would have exited here when it started capitulating. Let's quickly draw that out. Price range. So at the end of this weekly candle, we had the capitulation. Terrible words on a Monday. And on its depth, it would have been 84% since it capitulated. And if you bought back in when we got the buy trigger, end of the bar, it's weekly, so on the daily you can have better entries. You would have now been on 50% profit already. And what you actually can look at is this curvature. So way before the buy signal, that's like the most confirmed buy signal, you already have the curve up, and on the daily time frame, see that the first capitulation was a bit lower, but the first bright green one on the daily was here. And then capitulation stopped, and you go into the bid, taking a break, capitulated again. I have a problem with that word today. You see your buy signal was actually around on the end of this day. So another 48% profit on this buy signal. And if you would have exited on the first capitulation, I have to zoom in a bit. And you would have sold here, you would have been missing out on that pump a bit, that bounce, the infamous dead cat bounce after the double top. And if you're aggressive, you would have gotten 16% profit on that. But if you wait for a decent, the crossover, by playing it this way, would have saved 10% profits and then gained 50% up. So never catch the absolute peaks and to be more profitable than just holding and getting through the dip there. Another interesting thing on this chart is the weekly RSI. Let's move it up. We see we only just entering almost the overbought levels. And last time we even hit 94 on this peak. And then we had that crazy divergence here and also diverging to the other tops. It was diverging and also these peaks were diverging. Obviously the same on the peaks here. So that weekly RSI is a very nice indication of stops. When it's diverging like that on a weekly time frame, then you're in for a treat. But as you can see, we are only at 69 at the moment, and we could have a small pullback like here, but the last time we already had that sub top here, so we could get RSI wise a bit of a pullback before the big rise up. RSI still looks perfectly healthy. Also here we didn't reach all-time highs until RSI was much higher than this, the double RSI peak here, and that's pretty much for every cycle that the peaks are always when RSI is 80 or more. Weekly RSI still shows a lot of potentially move up, space for a move up for sure. Last time we went from into the overbought territory, we still had almost 400% gains ahead of us. So don't underestimate how much gains you can make in these overbought tops. Definitely don't think that overbought means a dump soon. No, it could be 400% gain still to be made. The weekly chart looks good. Dominance, we're hitting these critical support levels and we bounced off, so it's pretty much the bottom of this, the top, these local tops that we've been having as resistance here. We confirmed it as support, and we see that this major zone that we have been using since pretty much since May 21, May this year, has been acting up as consolidation here, broke down, we hit it, we bounced up and down exactly in that zone, broke it, confirmed it, bounced off, went back in it, consolidation, broke it, and we're now hitting it as resistance, and it's trying to enter this one again. If Bitcoin wants to be king of the gains again, you want it to break up, confirm, and bounce off exactly like it did here. Break up, confirm, bounce off. This is dominant, so this is the zone where the altcoins come out to play and make crazy gains in this part. Obviously, we could also get a rejection at this level and go down, or reject on top of the zone and go down. Something tells me if I look at this chart, this zone won't break that easy. And we might also, talking about Adam and Eve bottoms, here you have a very nice round bottom. That's the Eve. And we could be in for a retest of that level, but with much more wicky, fast action, making an Adam bottom, the Eve and the Adam bouncing up. I don't often mention those because it's really a higher time frame thing. I don't value them that much on lower time frames, but it's not a compound handle anymore. The handle goes way too far down. For me, at least, it's more than 50% of the cup height, and that's my break point. Could have made a nice cup and handle here, but I didn't. So market cap dominance, we have to see if we get more alt season, if we get rejected here, or that Bitcoin is king of the gains and goes back up to these levels. Volatility still low. I'm still waiting for that crazy $10K candle on the daily that we should get this year for Christmas, hopefully. Wishful thinking. Just looking at the longs are slowly rising, but also some shorts rising. So that could indicate a short-term pullback in a couple of coming days. But coming days could mean that we hit 70K easy before that. And the long term is still looking for much higher prices. Market cap, oh, what a lovely picture. Total market cap, I think it's even more important than looking at the Bitcoin chart, because we're not only trading Bitcoin. This very nice cup and handle stayed above the 50% level. Here we have the 50%. It landed exactly on that target for my handle, the 50% retrace of the handle, made a double bottom, broke out, confirmed the breakout, had a nice engulfing candle on this daily chart up, and it's now slowly going that way. Target up, still that $3.2 trillion pretty much, 3.3, 3.2. So that's a nice 14-15% market capitalization up, which means pretty much that Bitcoin and the other assets could go up much higher than 15% because price is not one-on-one related to the market cap. If there's scarcity and aggressive buying, price could go easily, well, 5x, 10x faster than the market cap growth. So keep that in mind. It doesn't mean there's only 15% space for Bitcoin and other cryptos to grow. And back to the US dollar index there. Let's take a quick look at the bigger overview. This white line was the previous week MMA. See that we hit 2 up targets, then we flash crashed down to the first down target, double bottomed on that level pretty much, and then went up higher. Next target is still 67. Okay, but we do have a pullback, and look what we did. We finally broke this red zone that we only managed to break one time recently before. Actually, we never broke it. It's the second time ever we broke this zone. This was the first time the new all-time high. We now are here. What would make the most sense is coming down to that 65-ish, confirming this zone as support for the first time ever, because last time we tested it, we dropped and fall through it. Got some nice support from these GANs, and this double GAN line, the very strong support zone, is quickly increasing too. So next target is still the 67 level. We do have a down target on the top of the zone, and that Fibonacci here. So let's round it off to 65K. And obviously, then we have this GAN line as support. Keep in mind, when it goes down faster, it will be a bit higher. It's just this GAN line here that's leading to this support. And if this takes longer, this will also rise with the GAN lines. And I think the absolute bottom at the moment is pretty much the not even 60K, sorry, typo, 61K. It's the current bottom. To remain bullish, that would mean that we're still on this trend line up here for the bottoms on the 4-hour chart. So this is what I expect, but things are crazy at the moment, so we could also just hit the 67, 68 zone here in a few hours already. The bullish price move is once again pretty parabolic, so pullback can be expected and would be healthy, but don't be surprised if we shoot up straight and keep doing that even, because the FOMO and the fundamentals are really kicking off at the moment. Where are we TD sequential wise? Yeah, the 2-hour, the 4-hour are on 12. So that's showing potential sideways consolidation or reversal for the coming couple of ticks. Higher time frames, 6 for still low. Even the weekly is only on a 6. So there's a lot of space there to go on a really high, much higher peak. Variances, oh, we got some harmonics coming in on the 4-hour that support that pullback narrative that we saw here. Because this would be a, oops, how much percent drop is this? It's like a 1.5% drop. We also have the CME gap somewhere below here. I have it on this chart. Yep. Yeah, ooh, the CME gap is the top of the orange zone. It's at 61K, pretty much exactly. So it's still looming there. We did leave other CME gaps open far below us that never got filled, but don't be surprised if it pulls a trick like this, making a slightly higher low on the 4-hour, filling the CME gap before blasting up again. It would also be a very nice shakeout of the over-leveraged long positions here. But that has more effect if we first break the all-time high. 67, people get all FOMO, open long positions, then we get the shakeout to 61 before bouncing up further again. It's a bit of a tricky space where we're in right now, so close to the all-time high, first time breaking this major support resistance zone. CME gap, quite recent CME gap from today being below, or like last night actually, below us. The to around 4-hour showing potential reversal. on the TD sequential, while the higher time frames still have enough space. We are getting several harmonics, but the end of the harmonic is quite high, and you got the HOP, the harmonic optimal price, probably by the looks of it, somewhere around that 67, 68-ish. So I'm not going to go into that. That's for tomorrow trading course, harmonics, and what a HOP essentially is. But this does support the narrative. Yeah, with a double top on the daily potentially. So that does support the narrative for small pullback toward maybe 61-ish even, bringing the crypto fear and greed. What is the index at the moment? We are in greed. Going to that, breaking that 67 new all-time high would probably go straight into extreme greed, and that's a perfect place to get a shakeout, retest of these, and refill of that CME level. Quickly looking at the chart here. Also, by the way, if we take a look, the train left the station in a rush from the previous bearish candle open to the previous bottom. We have a big ass liquidity zone here to the low 60s, and also one at that just above the 60 level. But we have been here before, so this was an area where there was plenty of opportunities to enter the trades for people here. So I don't put too much value on this one, but this one is definitely an active liquidity zone between that 61.5 and 62K-ish level. What is Bitcoin doing? We see trend momentum going down. No trend on true MFI, but still averages catching up quickly. Now we do have a bit of a triangle forming. We did have the 13, so the 9, 1, 2, 3, 4 candles reversal, potential reversal zone. Right here, just quickly going to it's not the clearest picture at the moment. It's a bit messy at the top, but we do have some kind of a narrowing, like a hollow triangle or something. That's interesting. You don't get those very often. Actually seeing is some curvature exactly on there. Yeah, that's right. Draw from the other side in this case. This one can go. That's a pretty strange pattern that you do see time from time to time. Two parabolas playing out in the same time frame. And it's usually a bit bearish, in my opinion. So bottom of the EMA ribbon is also in the low 60s. You can obviously wick through. So yeah, there's a lot of bullish strength in the market. So we could hit new all-time highs within hours even, without any blinking of an eye. go to that 67, maybe 68K, but keep in mind there's also a lot of signs that we get a pretty violent pullback to that 61K-ish level, these in-between zones, top of this zone. So be aggressive with your break evens and stop losses. Don't get caught in the action there. I think this is still very nicely tradable on the lower time frames to catch this last leg up. That might even go to the 68-ish. So it's actually more like a zone between 67 and 68 that I'm looking for in this way. Anyway, that was the analysis for today. I think we covered most that I wanted to cover. I'm going to give you a bit of a sneak preview after I stop the recording, so if you're interested, stick around. And for those watching the recording, I'll see you in the channels, and thanks for being here again.